Hi everybody, it's time to talk about the markets with Jim Cramer on the floor of the New York Stock Exchange. But Jim, first, I haven't seen you since the game. Congratulations.
Yes, thank you. And it was, they can't take it away. As a long-suffering fan, I was going to games in 1961 at Franklin Field. I am thrilled. I want to congratulate fabulous players, the MVP Nick Foles, of course Coach Peterson was a great leader, and Mr. Lurie, who was a fabulous owner and treated his fan base very well. He had a nice friends and family party after. It's always worth going to the Super Bowl. If you ever can borrow some money and go to it, I think you should, just as a spectacle and a pageant.
And you have your green tie on?
Yes, I do. And my wife took a very interesting video after we had won, where, of course, I was thinking that my father was the divine interventor, having passed away in 2014. And I was fortunate Mr. Lurie dedicated a Titan win right after he passed away. But I felt, you do feel divine intervention when you have something like that, because you're beating the dynastic team. And you don't hate them, by the way. You don't hate the Patriots. Mr. Kraft and his son run a good company. And then again, I mean, let the best team win, and the best team was the Eagles. And Coach Peterson outthought Coach Belichick. And Coach Reich on that, with the quarterback's coach, that incredible play, which is misdirection, which brings me back to the stock market. There was incredible misdirection at the beginning, as was to be expected, because when the XIV blew up, you can look up what that instrument does. It required S&P selling at the opening, which created this opportunity. But it's a long day, people. And if you bought at the opening, you're going to take profits. You're going to scalp. When we used to trade for a living, I don't obviously trade anymore, with Karen Cramer, she would have scalped that opening and would now be a seller. So let's just be careful. The market can go back down. The speed with which it came down was directly related to some volatility trades. People were so-called selling volatility, and viewing volatility, by the way, as an asset class, which is about as stupid as thinking that portfolio insurance could insure your portfolio, which is what we saw in 1987. So let's just be careful. It's a long day. It's a long period. But if the tell here, besides the fact that there were trucks outside, which is always a tell, that's local TV, was that Micron and Skyworks, which were the two companies that had said something last night, Micron being raising guidance, Skyworks being a company that sells chips, including to Apple, as the most, really, some people say has the most intellectual property, most chips in an Apple cell phone, both reported good numbers. And that caused those stocks to spike, which then caused a revaluation of Apple, which has been a principal reason why the stock market's been down.
GM also reported strong earnings.
Yeah, and you know what, GM and Micron, isn't it funny? Those were GM, Micron, and Ford are the cheapest stocks in the S&P. Ford very faltering because the numbers are not being delivered. But it is amazing to me that you got news on Micron and GM, the two of the three lowest multiple stocks in the entire S&P 500. And it shows you a low multiple stock with decent earnings can still produce upside. And I think that's encouraging, because it does tell you that stocks ultimately can have some correlation with the company. Ken Fisher, by the way, one of my absolute favorites and a partner of mine. People should still go back to a very relevant video that we did. We did a nice teaching. Was talking this morning on Squawk Box about how these bull markets don't end with a bang but a whimper, and was saying that this will probably be an opportunity if you go out a little bit. Don't judge it by this afternoon. I also pointed out this morning on Squawk on the Street that the S&P proprietary index, which I do, was minus 6.8 last night, and that's only happened that level 5 times in the last 3 years. 4 of those 5 times the market was up substantially in the next 2 weeks. So I think that is dispositive, and why it's worth to buy something. Now, unfortunately, with Action Alert, club members were able to get very good prices. One of the reasons why the charitable trust does not correlate correctly is that we got bad prices. But that's okay. It's not about what the charitable trust does. It's what the person who subscribes to Action Alert, and we will do an Action Alert video, it's what they are able to get, and I am grateful for the club.
Yes, more on Jim's take on the volatility we're seeing on ActionAlertsPlus.com, because Jim, you guys sold before this sell-off.
Yeah, last Tuesday we decided that bulls make money, bears make money, and hogs get slaughtered.
There you go.
And we had to sell some of our best. NVidia, we had to sell some Broadcom. Some of the stocks were up really huge. And now we're trying to reapply some of that cash. We're doing it gingerly. Again, it's a long day. Maybe we get another chance later in the day. I really think it's important for people not to panic. That was really the substance of my comments, both in Real Money in particular. I wish you'd read that article. Yes, you have to subscribe. What can I do? I can't work for free anymore. If I work for free, then we have a company that really doesn't able to have that much in earnings power. I don't talk about TheStreet much, but a lot of people on Twitter say, well, why don't you give it away for free? Well, I mean, why didn't I give my hedge fund away for free? Because the answer is you got to make a living. But I respect the fact that the downside is not wrong. The market went up a lot. That was a parabolic move. I didn't trust a parabolic move. So we sold a lot of stock. When we have a swift, sharp decline down 10%, I feel that once again you have to buy some stock. These are the disciplines I've learned over 37 years of trading. I'm not going to just abandon them right now. So that's what the wisdom that I'm trying to give you. Again, long day. Don't chase anything today. That will be, let's see, what's the right word? Stupid.
Jim, also, I was watching you on Friday. You were in Minneapolis, and all of a sudden, breaking news, the Federal Reserve forces Wells Fargo to replace some board members.
Yeah, that was pretty substantial.
What happened?
Well, I mean, what you have to do is you have to read the Sherman and Sterling report. If you read that, you will see 100 pages worth of misconduct. I was quite embarrassed that Tim Sloan immediately told you not to worry. They can still grow assets. That was certainly not the message of the Fed. A memo to the lawyers of Wells Fargo, do not tell the regulators what you're going to do. The regulators will tell you what they're going to do. Quite surprised at the bad ill-advised legal advice that Wells Fargo gets. Well, who am I to say that? Well, I mean, besides I went to Harvard Law, but that's okay. I could go to anybody law. Well, I've seen what the regulators do. Obviously, they don't want you to try to turn their lemon into lemonade. But that's what Tim Sloan's trying to do, and that's what got them in trouble to begin with. It's a very, very strong message from the Fed, and it basically says if you con people, you will have to pay. I thought it was good.
And as you said on Mad Money...
People hate me at Wells. Again, it's not about friends. It's about money. Now, Wells is going to be interesting, but Wells brought down the ETF, which therefore made JP Morgan the more interesting stock, which is the one that we'd like to buy for action alerts if it come in a little more. It's a long day. The market's already gone down very big since we started our talk here. That's what I'm concerned about.
Also, Jim, NVidia, a holding of Action Alerts Plus, reports on Thursday. You want people to be careful.
Well, because it reported a blowout quarter last time and the stock went down anyway. So those who are playing for the quarter, one of the reasons why we sold some NVidia is because you tend to get a very volatile, code word for down, move after it reports, and that's a better chance. Maybe we buy some of it back when we see that.
All right, Jim, who do you have coming up on Mad Money tonight?
Core Labs. Why is that important? I have stopped liking the oil stocks. I've stopped liking them because I think we're now in a zone where the fossil fuel class is beginning to take on the element of tobacco, where the tobacco stocks had their price earnings multiple shrink. I think the next generation of younger people who are going to manage money will avoid the fossil fuel stocks. So I just want people to be careful.
Okay, and everyone, Jim's commentary on video continues on ActionAlertsPlus.com.
Yeah, I mean, soon the market will be down at this pace. We started when the Dow was up 240 points. It's now there, it's now down about 150 points from there. That's the kind of market we're in. So let's take your time. You want to buy stocks? Take your time. Buy a little. Let the market come in. Buy some more.
All right. Join us on ActionAlertsPlus.com. Join the club.